Hello friends and welcome to StudyIQ. I am Joycey Joy and today in this lecture we will discuss about the secondary market and especially we will discuss about the corporate loans in the secondary market and the RBI expert task force which was appointed to study the scope of corporate loans in the secondary market, that is Manoharan Committee. We will be discussing about the scope of corporate loans in the secondary market. So let us start. Let us first come to the current affair. First, if we analyze the current affair, we will see that the RBI is Reserve Bank of India. It is a central bank of Indian economy. So RBI has set up a task force and the task force was set up in order to study the possibility of a secondary market for corporate loans in India. So this task force has submitted its report recently and the task force was chaired by Manoharan. That is why this committee is called Manoharan Committee. So we will come to all these details later in this lecture, but before that let us first understand what is meant by a corporate loan. Now, what is meant by a corporate loan? A corporate loan refers to a loan or a borrowing undertaken by a corporate or a corporate sector. Now, what is meant by corporate sector? Corporate sector refers to those firms or those companies who are in the private sector. So private corporates. So this is meant by corporate loan. So whenever a loan is taken by a private corporate or a private firm or a company, it is called a corporate loan. Now, it is not a loan taken by an individual and it is not a loan taken by the government. It is taken by private entities and corporate means an already established association or a company or a firm. So this is called corporate loan. Now coming to the features of the corporate loan. First of all, the amount involved would be very high. This is because the corporates would be borrowing money from the market or from financial institutions in order to undertake their operations. So, considering the size of the corporate firms or the private companies, the amount involved in the corporate loans would also be very high. Secondly, this is mostly for long period of time. So, this is the second thing. And thirdly, the sources of finance for the corporate sector or corporate loans, they are mostly financial institutions including banks and NBFCs. So these are the three important facts regarding corporate loans. First of all, the amount is very high. Second one, they would be mostly for a long period of time. And thirdly, the sources are mainly financial institutions which includes banks and NBFCs. So these are three important things. Now let us come to other details. So let's first understand what is meant by a secondary market. This is because the committee was appointed by RBI in order to study the scope of a secondary market corporate loan. So here what is important is that the scope for providing corporate loans by the secondary market. This is what the committee has studied. That's why let us understand what is the secondary market. Now, before that we need to understand what is IPO. Now, IPO refers to initial public offering or initial public offer. Now, what is meant by initial public offer? Initial public offer means when a company issues the shares or securities for the first time, it is called an initial public offer or an IPO. So, this is when a company or a corporate or any firm issues its shares for the very first time. Now, when a company or a corporate issues the shares for the very first time, the company does it in the primary market. So, the first issue of the shares takes place only in the primary market. So, primary market we can define as a market where a company or a firm will issue its first shares, which is called IPO. Now, here what we need to understand is that in the primary market, the business or the lending and borrowing is between the company and the investor. This is because the company is issuing the shares and it is for the first time. So, the company will directly sell the shares to the investor. So, this is the most important feature of primary market. This is very, very important from examination perspective. So, basically, the shares are issued for the first time by the companies, and that is in the primary market, and here the business is directly between the company and the investor. And this is called IPO or initial public offering. Now after IPO, that is after the shares are issued for the first time, these securities will be available for trade in the secondary market. Now what we need to understand is what is secondary market. Now secondary market is a marketplace. It means there is sale and purchase of shares. So it is a marketplace for the already issued shares. That is why it is called secondary, because at the first time, that is in the first issue, the company will issue it directly to the investors in the primary market. Now the already issued shares in the primary market, they are again traded in the secondary market. So basically secondary market is a marketplace for the trading of already issued shares. Now here what we need to understand is that in the secondary market, the sale and the purchase of the shares is not directly between the company and the investors. It is between the investors and the investors. That means those investors who already purchased the shares in the primary market, those investors will sell the shares in the secondary market. So that is why in the secondary market, the trading is between investor and investor. So there is no involvement of the company or the firm which has issued the share. So we can also define secondary market as a market where the investors will buy the securities from other investors and not from the issuing company. So this is between investor, not between the company and the investor. Now let us also see what are the key products that are available in the secondary market. So if we talk about the key products that are available in the secondary market, it can be equity shares, it can be bonds, it can be preference shares, treasury bills or T-bills or debentures. So these are the key products that are available in the secondary market. Now, who is the regulator of the secondary market? SEBI or Securities and Exchange Board of India is the regulator of the secondary market. So these are the important facts regarding secondary market. The difference between the primary market and secondary market is very, very important from your examination perspective. Now let us come to the suggestions given by the committee which was appointed by the RBI in order to study the scope of corporate loans by the secondary market or corporate loans in the secondary market. So if we need to briefly talk about the committee, the task force was led by Canara Bank Chairman T.N. Manoharan, and that is why this committee is popularly known as Manoharan Committee. So this was headed by Mr. T.N. Manoharan, who is the head of the Canara Bank. Now the first suggestion given by the task force, it suggested for the creation of a self-regulatory body or an SRB to manage the secondary market. So this was the first suggestion given by the committee. Now regarding the self-regulatory body. So the purpose of the self-regulatory body is to develop appropriate benchmark rates for the secondary market purchase and sale of corporate loans. We have seen earlier that the corporate loans are mainly dealt by the financial institutions like the NBFCs and banks. So now the committee is to study the scope of corporate loans in the secondary market. So in order to expand the scope of corporate loans in the secondary market, the committee suggested that a self-regulatory body must be created. And now the purpose of this body should be to establish or to develop appropriate benchmark rates. That is the interest rates or the rates of return for the purchase and sale of corporate loans in the secondary market. Now, the role and the functions of the SRB or the self-regulatory body includes standardization of the paperwork that is associated with the loans and thereby making or giving a uniform standard, making the loans easier to be traded in the secondary market. Now, second function is to maintain the standards and examine the documentation. So, standard maintenance, and thirdly, maintain a central registry in order to improve the accountability. So, these are all some of the functions suggested for the SRB or the self-regulatory body. Secondly, apart from creation of a self-regulatory body which would be a quasi-regulator, the committee also suggested that the existing requirements should be changed. So it suggested that the secondary market for corporate loans must be thrown open to mutual funds, pension funds, insurance companies, etc. This is in order to improve the scope of corporate loans in the secondary market. Now we have seen that it is dominated by financial institutions like banks and NBFCs. So by including the mutual funds, pension funds, insurance companies, etc., the scope of the corporate loans in the secondary market can be improved. And in order to start with, the committee recommended that long-term loans be prioritized for sale in the secondary market. So initially long-term loans can be provided, and later on, after the secondary market would gain experience in providing corporate loans, other credit facilities can also be included in the secondary market. Now, what is the scope of providing corporate loan in the secondary market? It can provide cash credit, it can provide credit card receivables, it can provide assets with bullet repayment and non-fund based facilities. But it said that in the initial stage, the secondary market can deal with long-term borrowings or long-term loans, and in the later stage, other financial products can also be traded in the secondary market. Now, let us come to the rationale of the committee. First of all, the secondary loan market in India is largely restricted to sale to asset reconstruction companies, ARCs, and ad hoc sale to other lenders. It means that in the secondary market, the loans are primarily provided to asset reconstruction companies and other lenders. This means banks, NBFCs, etc. So, there is no or very limited borrower issuer or borrower creditor relationship between the secondary market and the borrower. So the secondary market does not directly provide loans to the customers, but instead it provides to asset reconstruction companies or to banks and other financial institutions. So there is no formal mechanism that will help in deepening the secondary market with regard to providing corporate loans. Now, if we see the participants in the secondary and primary loan market, the only participants at present are banks and NBFCs. So, banks and non-banking financial companies are the only participants currently in the primary and secondary loan market. So, the task force recommended that it is important to widen the spectrum of participants in order to boost the secondary market. This will help in enhancing the secondary market in India. Now, third one was the absence of sufficient liquidity. So, the committee also suggested that the secondary market in the corporate debt is liquid. Illiquid means lack of liquidity in the secondary market with regard to corporate debt. So, in order to improve the liquidity of the secondary market with regard to corporate loan, also the committee has suggested these measures. Now, let us see what is the way forward, what can be done. First of all, bringing greater innovation and regulation in the secondary market with regard to corporate loan is very, very important. Secondly, it is important to prioritize. This is because the committee itself recommended that the priority in the initial stage must be given to provide long-term finance. So, prioritization, greater innovation and better regulation. These are the three things what are needed in order to improve the scope of corporate loans in the secondary market. You can find the PDF of this lecture on our website www.studyiq.com. You can also follow my Facebook page for more video updates. You can write to me at joyce.studyiq@gmail.com for any of your queries and clarification. Thank you.